I'm sharpening my pencil now, and I'm looking at crypto miners, crypto itself, and backed, which is kind of like an infrastructure play, if you will. So here we are last year. I'm just kind of chilling, and one day I wake up and there is a 165% gain on my backed holdings. And I'm like, oh, that's interesting. And this at the time, I believe, was the Trump group had put a buyout offer in for backed, which ultimately didn't go ahead, but they put 100% premium on the company. And there we go, back down, not only to where the baseline was, but actually below, which was, I mean, truly incredible to see, to witness it. Hello and welcome back to the Royalty King. Another episode today. Guys, if you haven't already subscribed to the channel, please do me a big favor. It costs you absolutely nothing, but it does help me out in terms of the algorithms and gives me more motivation to continue on doing a lot of the free content on YouTube. So today we're talking about one of the most interesting rides I've had, at least in recent history, talking about backed group. Now, if you aren't aware, on Substack, I have written an overview and evaluation in terms of backed, in terms of where it could get to. And there's also an options play that gives you the chance to get paid quite a lot, 100% on capital over quite a couple of years, with the right to buy backed at basically half its price today. So I go over that. You can get a free preview and you can check it out. And I think it will really complement the session today in terms of looking through backed. What is backed? We'll get into that in a moment. I just want to comment on the price action. It has been absolutely spectacular in this thing. If we go all the way back here last year, I bought into backed and just had a position that I didn't really pay too much attention to. I was still getting to learn the business in the crypto sphere. I'm relatively bearish in terms of, I think the market next year can start to see some unwinding. Doesn't mean a big crash, but I do think that there can be some liquidating events next year that will be fun. And if that's the case, and it kind of aligns with this 4-year cycle for crypto, I'm sharpening my pencil now, and I'm looking at crypto miners, crypto itself, and backed, which is kind of like an infrastructure play, if you will. So here we are last year. I'm just kind of chilling, and one day I wake up and there is a 165% gain on my backed holdings. And I'm like, oh, that's interesting. And this at the time, I believe, was the Trump group had put a buyout offer in for backed, which ultimately didn't go ahead, but they put 100% premium on the company. Bounces around, lots of vol, lots of vol, lots of vol, lots of vol. And there we go, back down, not only to where the baseline was, but actually below, which was, I mean, truly incredible to see, to witness it. It almost got to, I think, a 40% drawdown from the baseline. So it was super volatile, bounces along, and then makes this big run up, big run down, big run up again. So at the time, around the lows, I added to my position. And what has happened since, I must confess before I forget, is that I've had a 3 or 4x on backed, and I've sold out my initial capital. So as Uncle Rick would like to say, I'm past the point of no concern. I've made the money, and the position that I have left in backed is just playing with the house money. So I need to say that first of all. But it's been one of the most volatile stocks I think I've ever owned. Very, 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 very crazy. Okay. So disclaimer, obviously nothing I say is advice, guys. Going to go over backed holdings and keeping it super, super brief. If you want to learn more, again, head over to Substack and you can take a look at the deeper dive that's fleshed out. So it's a fairly new company that has arisen out of the birth of the new asset class that is crypto. You get a new asset class and we stumble around. We have closing exchanges like the FTX debacle and all this sort of stuff, but we need exchanges to offer services and products based out of the asset class that is, as I said, quite new. So their idea is to build solutions that are particularly business to business, but business and institutions to grow with this new asset class or the crypto economy. So new asset class and all the byproducts that come along with that. Revenue, 3.5 bill at the end of last year. Now, you got to be careful with this because if you just take that at face value, you think to yourself, holy moly, this thing's increasing its revenue at 350% year on year. How is that even possible? I'll explain that in a minute. Company's still yet to hit scale. It's a negative net income play. In a strange way, it's kind of like another roll-up company, kind of like Gold Royalty was before it had hit scale, and growing revenues at crazy rates, but needs to get to those economies of scale before they can start to get net income and cash flow positive. This is not a cryptocurrency itself. It's not a token play. It's a company positioning itself as the rails for on-ramping for digital assets, payments, loyalty they just sold, and institutional workflows. It's going to be a B2B based infrastructure. It's got its non-core assets out of the way now, which was good because I think they made a mistake. They tried to do like credit card loyalty businesses with crypto backing. I don't see that as the way to go into the future. I think B2B and institutional needs being met in a regulated framework and infrastructure, that's what they should be focusing on, in my humble opinion. Have all the, wallet custody services, all that sort of stuff. Simplifying capital structure and just moving to a single class common stock was a really good move because people hate all different stock classes or share classes within the same asset. It just breeds confusion and mistrust, in my humble opinion. And here's the key factor. I think their regulatory and licensing footing gives them a lot of legitimacy. So if you're an institutional player, or a large family office, or a large business, and you want to be able to trust an outsourced partner for cold storage, for futures and interest rates on cryptocurrencies, options, derivatives, I think you're going to want to use someone like Bakkt that has a licensed footing, and they're not like, you don't want to end up the way of the FTX, that's for sure. So market opportunity. Here's where you've got to understand, this is, from my point of view, a venture investment. So venture capital investment, there's potentially great upside and great risk because the future is unknowable, obviously. And then the future in a new asset class obviously has a higher degree of uncertainty again. So just to paint the picture, if we're looking at what the stablecoin market might be over the next 5 years, 38% CAGR is truly incredible. And when we start to think about what might be tokenized, okay, not turning into a cryptocurrency, nothing like that, I have really come around to the idea that all these assets listed here will have some form of tokenization. We know US dollar stablecoin, USDC, they're stablecoins backing a fiat currency. I believe treasuries, it makes perfect sense to tokenize the treasury market and to trade that. The gold market, silver market's already here. That will happen. Real estate, equities. So what would happen if you had a token for every share of common stock that could be traded not just, 9:30 to 4:30 on hours where the stock market is open, but 24/7 effectively? What would that do to the volume of trading? And if you're an exchange or brokerage like Bakkt is, your volume would go through the roof and you'd be collecting fees on fees on fees on fees on fees, which is a wonderful place to be. Here's the dark purple line is real estate. I think this is the one people are sleeping on. I, a couple of weeks ago, saw an ad in my newsfeed for project funding for a small apartment building in Argentina. Yes, you could literally go on, use your crypto wallet to buy tokens. And you could do that from, if I remember correctly, as little as $100 investment. And this just breeds opportunity. If I were going back 10 years ago and I had the opportunity to fund rolling up health clinics using some kind of tokenized structure, I would absolutely jump at the chance to get in front of an audience on social media and really explain the opportunity. So I think that for roll-ups, for equity, for businesses, private and public, and real estate, I think stablecoins offer a really, really interesting window. And I think they're going to be certainly an impressive asset class into the future. Okay, one-page overview. If you don't like volatility, for the love of God, stay away from this thing. As I just showed you at the introduction, it's a super volatile ride. 45 million market cap. It's net cash. Okay, so call it 400 million enterprise value at time of recording. And as you can see, down 14%. Sometimes it's up 100% in a day. It's super, super volatile. Revenues, as you can see, they've been growing their revenues with the taking over of Apex Crypto, which was a Chicago local brokerage. And they were doing, if I remember correctly, about 12.5 billion in volume. So that was a big key acquisition, which I like in terms of really hitting scale quickly. I think that's going to be a good acquisition over time. The question is, when is this thing going to actually spit off some cash? That's what we got to look at. This is what I looked at in terms of like a gold royalty type investment. When did I think they could hit net income? When did I think they could hit free cash? Now, according to the analyst estimate and the company's guidance, 2026 is the year they're going to have free cash and positive net income. You can see down there in the green. It's estimates. We don't know what the future is going to hold, but it certainly will be interesting to watch now that I'm from a base of no concern. I literally cannot lose on this investment. True annual revenue, if you strip away the acquisition transaction volume and look at revenue that can accrue to the top line, bottom line, I suppose, price to sales probably makes the company look a little rich. And I think this is where you get some of the volatility. Sometimes people are looking at the top line, pricing it as a venture or growth company, and then whacking a price to sales or EV to revenue multiple on the company. If you did that in base and bull case, it doesn't look interesting at all. Certainly not in the low case. It would appear to be way overpriced. Unless, of course, you disagree with the multiples that I'm using. And you might be right. If the company is growing at that fast rate, I've seen these things attract ridiculous price to sale multiples. I just have no idea how to value a growth company that hasn't hit scale yet, that hasn't hit net income. You can play around with that at your leisure. If you took it the other way and you said, look, if you can get 100 million in true revenue and your gross margin, or call it your EBT or your EBITDA margin, as well, perhaps at 60, 70%, $70 million in EBITDA. Let's just use an EV to EBITDA multiple. And if you whack a 10 on that, you're getting pretty close to 7. If you're getting 12 and a half, you're getting more than a double still based on today's enterprise value. So there's certainly a bull case to be made. The question is how much risk is involved in the growth projections and how aggressive you'd be willing to be in underwriting the growth in terms of the multiples you would apply. So the opportunity, I don't want to talk too long because you can go and see this on Substack. If Bakkt executes on its pivot and it captures a decent amount of that, 40, 50, 60, $80 trillion market, who knows, in terms of stable coins growing at nearly 40% CAGR over the next 5 to 10 years. It carves out a niche of trusted regulated platform, which they have, and I think that's their key trump card that they should be playing. Then the upside could be even still more dizzy than it already has been, especially in the early stage infrastructure play in a relatively new asset class. Caveat, I don't think this is a safe bet by any means. I'm not treating it as a value investment, of course. This is a venture capital investment that I've already recouped my initial stake. And so I'll be really watching with interest from the sidelines, trying not to get too emotional. It's still high risk. It needs to execute. It needs to hit net income positive. And so it's appropriate for someone who's only comfortable with risk or belief in the broader crypto infrastructure. If that's not you, obviously you wouldn't go anywhere near that. So they're my thoughts, guys. Once again, head over to the Substack. I want to keep these YouTube overviews short and complement it with the deep dive valuation that I have put together in not on pen and paper, but digital ink. So thank you guys. If you're not already subscribed, please do so and leave your comments in the description. And I look forward to getting back in front of the camera a little bit more now. So take care.